Welcome to US election week, where a limited economic calendar becomes largely irrelevant. The only critical indicator is due Friday with the University of Michigan confidence report. However, some investors only care about the pulse of the nation after election day. The contentious election is likely to be very tight, according to a narrowing in public polls. That cost investors last week as the S&P 500 index put in its longest losing streak since 2008 as the possibility of a Trump presidency appeared to grow. According to EPFR, investors made a dash for cash in the week through November 2nd, putting $36 billion into money market funds. Option traders sought protection, forcing the VIX index to its highest reading since June's Brexit vote. But investor fear was not confined to the United States. The Eurostoxx 600 index fell to its lowest reading since July, spurred on by a surge in the euro currency. The dollar weakened in all directions as polling day approached. And while US Treasury yields likely dipped on demand for safety, investors still withdrew the largest amount from high yields so far this year, selling $4.1 billion worth of bond funds. Meanwhile, redemptions of US stock funds hit $3.5 billion, bringing the total outflow so far this year to $92 billion. The markets are mostly at the mercy of the election outcome. Further pressure on the US dollar is widely expected to see additional weakness for stock markets around the globe. Investors will probably do better if they pay no attention to the polls, but instead consider what happened to British stocks following the supposedly impossible vote to leave the EU in June. That's all from IB Traders Insight. Join us online at ibkr.com/ti. Hello, thanks for checking out our YouTube channel. Subscribe by clicking the button below. And over here, check out the latest short videos, market color, and digital exclusives.